Hi everyone, it's another Monday and it's time for our Monday market outlook. So last week, the market just traded in a narrow range awaiting the GDP numbers. The Philippines GDP growth accelerated to 7.6% in 2022. That's a great number. It was above consensus, it was above expectations. This GDP growth put the Philippines at number 23 in terms of annual GDP growth globally. We mentioned on our previous episode the existence of a January trifecta. So just monitoring where we are right now. We had the Santa Claus rally. Our first 5 days of January was up 3.4%. Currently, the market is up 5.78%. So we only have a day left for January. As long as we maintain a narrow range for the PSEI, we can assume that we can have a January trifecta for 2023. And as mentioned, during the times when we had the January trifecta, the year usually ends on a very positive note. Let's look at the chart here. As you can see, we traded on a very narrow range last week. The market was really undecided where it wanted to go. Even after the GDP numbers came out, the market was still on a holding pattern. So I guess this is a distribution because today the market is down like 1.7%. Now we did plot that the market might test resistances here at 7,170, and if you look at the 15-minute chart, it did follow that kind of trajectory here, right? So if we extend this line that we charted here, it did follow that, but it didn't quite reach the resistance here. It only reached 7,130, after which it has now started to retrace. So we can delete this line here and then if we go back to the daily chart, right, we are now on track for this correction here. Now, as mentioned, our support here is at 6,830. So expect the market to test that support level in the next few days. If we draw a Fibonacci chart here, that level also coincides to the 0.23% support, right? So we can look at 6,830 to 6,800 as the next support, right? So we will put an alert here, 6,800, and see how the market will react when it tests that support level. So some news that came out last week: Mondenisin acquires 15% stake in Figaro Coffee Group. We've been monitoring FCG for quite some time now as one of our stock playlists, and after this news came out, Figaro Coffee went up to a high of 0.94. This is really a sell the news scenario here. As this news has already come out, I think it has already priced it in, and when you hear this type of news, it's usually a good time to sell the stock, right? I've already sold all my FCG shares, and remember, most of these stocks don't have a high volume, so I don't like keeping these kind of stocks too long in my portfolio. As the news came out, I already sold on the news, and congratulations if you were also able to sell on news. So as mentioned last week, we might expect some rotational action. The beneficiaries of this rotation will be your second liners. So if we look at the past 5 days and see where the money flow is going, we have Macro Asia, UBP, FCG, CREIT, Bloom, all second liners. We can clearly see the rotation already happening. So at this point in time, while last week we recommended for investors just to look at the markets and see how the markets can react, monitor your second liner stocks like UBP, FCG, and start top slicing on those second liners. So as the rotation is happening to the second liners, it's time for us to go back to our first liners and see at which levels we can start buying back those stocks. So we have the banks here. We have BDO, BPI, and Metrobank. I've already sold BDO and BPI 2 weeks ago when it hit this level, and now I'm trying to look for a good entry point to buy back. Now BDO, as we are in a retrace, expect BDO to try to fill this gap here. See how BDO has already filled this gap on this big candlestick. It might fill this gap in the next few days and work its way up to 114. So I'm going to put an alert here as well as 113. So this seems like a good level for us to monitor BDO and see if there's an opportunity to buy back, right? So BPI, right? Same case. We are looking at a potential gap fill for BPI here. So look into entering at around 102. Let's put an alert here, 102, as well as our psychological support at 100 here, right? So Metrobank, I haven't sold Metrobank. I think it's still cheap, but we can look into going in at around 56, right? And if you draw a Fibonacci chart here, right? See, we have here 56.50 and 54.50 as a good level for us to monitor, right? So we have Ayala Corp also, potential gap fills. See how the chart patterns are quite similar, right? So we can just look at this gap fill and see potentially where we can come in. 707 seems like a good level. 705. Aboitiz Power, right? Sees potential gap fill here to 34.85 or 35. So let's put an alert here. And I put an alert here, right? So we're looking into buying back at these levels. Semirara, there's a good opportunity here to see if we can buy back at 32, right? So you can look at your favorite stocks and see where there can be potential gap fills for you to enter. Last week was an important week for the S&P 500 as it was trying to break through its critical resistance at 4,000. It was able to break through that resistance and it's now resting at around 4,057. This rally was primarily driven by very positive sentiment that we may experience a soft landing for 2023. If we look at this chart here, the S&P 500 even tested its 4,100 resistance. So as mentioned, we might see a gap fill to 4,120 before the market decides where it wants to go. Is it going to move further up and fill this gap, or will it retrace and go back to 3,750? Remember that some of the biggest names in tech will have their earnings calls this week. We have AMD, we have Snapchat, we have Spotify. On Tuesday, we have Meta, we have Alphabet, we have Apple and Amazon all reporting earnings this coming week. So the next critical event this week would be the FOMC statement, which will be on this Thursday at 3 a.m. Philippine time. The market is expecting a 25 basis point rate hike, which would put the Fed interest rate at 4.75. What happens, or the statement that Jerome Powell may give about the status of continuing rate hikes or how long rate hikes will remain elevated. Remember that this rally here is riding on the back of dumb money, right? So we presented the dumb money index and the smart money index. The dumb money index is currently sitting at around 77, right? So that's quite high. So every time dumb money index reaches that high, it signals market tops. Now, what I'm on the lookout for is that smart money is just on a holding pattern. What's happening here? There's no movement in smart money. Are they just waiting for the right time to go in and move the markets, right? If the Fed becomes more hawkish, then that may prompt smart money and start money rotation into the defensive and start a sell-off on tech. No? If the Fed has even tiny hint of dovishness, you can expect the market to continue its rally up to its next resistance point at 4,250. So let's watch out for that critical event this Thursday. If you look at this chart from CNN's Fear and Greed Index, we are already at 69. This is greed, no? We're almost at extreme greed. And as Warren Buffett says, when the markets are fearful, be greedy. And when the markets are greedy, be fearful. That's why I'm a bit wary of where the market is going to head soon. Is smart money going to make a move to the downside given that traders are currently greedy, right? So we are usually tracking the S&P 500 because this really represents the top stocks. This particular index alone can already give you an idea on the price action of the individual stocks that are included in this index, right? So for example, we did say that the S&P 500 has broken out from its critical level here. But if you look at the individual stocks here, Tesla, see, critical level here, critical resistance trend line, and it has broken out also. So same behavior, Apple, right? Downtrend line, critical level, breakout. Nvidia, right? There's a downtrend line here. It was sitting in a critical level and it has broken out. And in particular for Nvidia, look, that this is a inverted head and shoulders pattern. So as this has already broken out, look at the upside here. So we have a potential upside for Nvidia of up to around 275, which corresponds to these gap fills here. Look at that big gap. Now Google also same. It's also at a critical level. So the S&P 500, by us monitoring the S&P 500, it gives us an idea of the stocks that are inside of that index. So you can use the S&P 500 to determine critical levels for you to make a decision to buy or sell a stock. That's it for this week's episode. I hope you like this video and please subscribe to the channel for weekly updates on the stock market. Good luck on your trades. Please manage your risks properly. And I'll see you again next week. Bye-bye.